Recording in progress.
All participants are requested to keep their audios on mute to avoid any interruptions throughout the session. And we are waiting for everyone to join in, so please be patient. While we are waiting for everyone to join in, I'd like to brief you with the protocols. All participants are requested to keep their audios on mute to avoid any interruptions throughout the session. All questions will be answered at the end of the session. You all are free to type them into the chat box. There will be a question and answer session, so feel free to ask your queries. All individuals are requested to fill the feedback form in the end, as your feedback is what makes us do better. The quiz will be held shortly, so please retain your enthusiasm for that. And the winners will be announced at the end of the session.
अच्छा, देखो मैंने व्हाट्सएप किया था मैंने।
We'll wait for another 2 minutes and begin then.
धन्यवाद। एनालिस्ट को कहाँ से होते हैं? मैं होस्ट नहीं हूँ।
When prosperity comes, do not use all of it. Over 2,500 years ago, China's most famous philosopher, Confucius, gave insightful guidance on many spheres of life, including finances. There is no arguing that managing one's finances is the most crucial aspect of one's life. Money may lead you to new heights and bring you down, but someone who knows how to manage their finances will never face trouble in the long run. A very warm welcome to everyone. We hope you all are safe and doing great. I am Shreya Maheshwari from the Finance and Investment Cell, Shivaji College. There's no better start to our event than getting the blessings of the Almighty. We present to you the Saraswati Vandana before commencing the event.
Yeah.
Now, before we proceed to the event of the day, I'd want to draw everyone's attention to the protocols that must be followed for the session to run smoothly. To begin, I would like to request that all participants keep their audios on mute to avoid any interruptions throughout the session. Second, all questions will be answered at the end of the session. You all are free to type in your queries in the chat box. There will be a question and answer session, so feel free to ask all your queries. All individuals are requested to fill the feedback form in the end, as your feedback is what makes us do better. The quiz will be held shortly, so please maintain your enthusiasm for that. The winners will be announced at the end of the session. We are extremely elated to bring you today's webinar on personal finance in collaboration with budding analysts. Now, I would like our convener, Dr. Shivani Gupta, to say a few words.
Thank you. So, as the convener of Finance and Investment Cell of Shivaji College, I welcome you all to the first event of our cell for the academic session 21-22. I am delighted to announce that today the team of Finance and Investment Cell is organizing a webinar in collaboration with budding Analyst and Globalise on the importance of personal finance management. Management of personal finance has always been crucial. However, in today's time, when less risky alternatives are giving us low returns and the uncertainties in financial markets are increasing, it is of even more importance for one to widen the portfolio and know all available alternatives. So, in today's session, we look forward to learning new. To welcome guest speaker of UCLA graduate, Mr. Viraj Nanda. Sir, we are honored to have you with us today. Also, our principal, Sir, Professor Shiv Kumar Sidev, who is not able to join the event today due to his busy schedule, is also conveying his wish. This, I thank you all for joining the session, and we hope that you have an enjoyable learning experience with us. Thank you.
Thank you, ma'am, for your warm words. The Finance and Investment Cell of Shivaji College, a student-run educational society, strives to give financial literacy as well as beneficial insights into the financial sector to our society's growing youngsters, transforming them into more responsible stakeholders in the globalized economy. Now, before we begin, we would like to introduce budding analyst who has made this event possible.
Can your goals have a limit? Can learning elevate your true potential? If so, how freely can you access it? While you access and explore it, do you fare well in raising your bars? Do you choose to learn from the best? How would it be if you were guided and mentored by industry experts? Trainers who are passionate for your success. Are you being empowered and learning the right skills? Are you learning beyond theory? Are you learning to lead?
Budding Analyst is the next gen's go-to platform to access curated content covering in-depth analysis on a multitude of topics. They strive to foster a community of readers and analysts. Their offerings include interactive webinars, workshops, online courses, live projects, blogs, and competitions. Why choose Budding Analyst? Unlike any other e-learning platform, they provide real-time training programs with live training sessions to students to master the project area they enroll for. They even provide access to the recorded sessions. They have experienced industry personnel as mentors and over 2,000 students from 300 plus institutes. All their trainers for webinars, workshops, training programs, and live projects have over 12 years of experience in equity research, portfolio management, and investment advisory, who are currently working as vice presidents and equivalent positions with leading investment and financial consulting firms, banks, investment banks, etc. All the registered students attending are eligible for the following benefits. You will get various free knowledge sharing sessions by budding analysts, discounted prices on the courses and live training programs, and free demat account opening with reimbursement on AMC. A 20% discount on the Globalise premium plans, and a $10 incentive in the account of the students who will sign in on the Globalise platform will also be provided. Speaking of Globalise, Globalise is India's first platform for guided global investing. Through Globalise, customers can access international financial markets and get the necessary guidance to make informed decisions to construct a geographically diversified portfolio. Brace yourself. So now it's time to start the session, but before that, we have a quiz. It has 10 questions, and the top 5 individuals to get the most answers correct in the least time will get a cash prize of rupees 1000 each. The quiz will be held on Budding Analyst's Instagram handle. The questions will be displayed on their story, and you will be given 30 seconds to answer one question. The questions will be displayed on your screens too for the reference. Before we begin the quiz, I would request you all to follow their Instagram handle for the smooth functioning. Question 1. What happens when you buy a company's stock? Question 2. What does it mean to buy a company's bond? Question 3. Any irrecoverable portion of sundry debtors is known as? I would request you all not to answer in the chat box. Question 4. If you lend money to a company in exchange for receiving interest, you are buying. Question 5. Spreading out risk in your investments is called. Question 6. When companies share profits with stockholders, this is called. Question 7. Upward trends in the stock market are called. Question 8. If you purchase a bond and interest rates rise, what will happen to the price of the bond? Question 9. Ups and downs in the stock market are known as. Question 10. Which startup can help you in learning practical implications of finance? So this is for the quiz part. I
Hi
hope
Shreya, can you go back to the fifth question? There was a technical glitch, so the students couldn't, see the options for that. So please go back to question number five once. Yeah, thank you so much.
question 5. Spreading out risk in your investments is called. Question 6. When companies share profits with stockholders, this is called. Question 7. Upward trend in the stock market are called? Question 8. If you purchase a bond and interest rates rise, what will happen to the price of the bond? Question 9. Ups and downs in the stock market are known as? Question 10. Which startup can help you in learning practical implications of finance? So this is it for the quiz part. I hope you guys enjoyed it. Winners of the quiz will be announced at the end of the webinar. Taking the session forward, we have Mr. Viraj Nanda with us. Good afternoon, sir. Now I would like to hand over the mic to my co-host, Divya.
Good evening, everyone. I am Divya Arora from FIC Shivaji College. Mr. Viraj Nanda graduated from the University of California, Los Angeles with BA Business Economics and College Honors. He is currently the co-founder and CEO of Globalise. In his role at Globalise, he is responsible for designing and implementing the strategic direction for expanding Globalise's footprint in India. Mr. Nanda began his career as an investment banker at Deutsche Bank in London. He was also a member of the advisory team for select strategic clients across the banking and specialty finance verticals. Sir, we are delighted to have you here with us today. Now, we request Mr. Viraj Nanda to speak on the agenda of personal finance. Please, sir.
Hi, everyone. My pleasure to be here today. Firstly, I would like to thank the Finance and Investment Cell for having me here and inviting me to this session. And thanks to Budding Analyst for organizing it. So, as you all know, the topic today is personal finance, and this is a topic that's very close to my heart. So, it's a pleasure to be here today and be speaking on this. So firstly, just wanted to cover what do we mean by personal finance management and what are we going to be talking about today. So effectively, personal finance management is how we can effectively manage our money better to help build a better, more secure financial futures for ourselves as well as for our families. So through the session today, I'm going to touch on a few topics. Firstly, in terms of how to actually go about the process of thinking about managing your personal finances, how to practically implement it, and then from then on, talking in terms of the importance of it, why it is good to start that as early as possible, and then some potential avenues to actually build a better personal financial situation for each one of us. So if you can move to the next slide, please. Right. So the most important aspect when thinking about managing finances is to build a habit of saving as early as possible. And there are many different approaches in terms of how one might think about saving, but this is something that I've seen used commonly. I use it as well, and I feel has worked. Which is the first step is really analyzing one's financial situation, understanding income and expenses to to actually form an overall view on your financial situation. The second is then to actually budget and set some targets in terms of, be it savings goals, be it cutting down on certain expenditures, and actually having specific targets that you want to work towards. The third is then, of course, making sure we are staying on track to actually accomplish those targets. And in the background of all of this, as we understand our expenses, learn how to manage our finances better, the most important element is actually saving and investing that money and allowing that money to grow. And if you can just move to the next slide. Thanks. So as we talk about investing, so I think the two key questions that is very important we understand. The first is, why should we start investing in the markets? And the second is, why should we start investing in the markets as early as possible? So when we talk about why investing in the markets, and when we're saving money, there are many different ways in which that money that is saved can be deployed. The most common way that people start saving money is through fixed deposits, and it's good to build that habit early on. But the important thing is, by actually allowing that money to grow and letting that money work for you, we can land up at a much better financial situation by actually putting that money to work in the equity market. So just taking a simple example here, looking at 1 lakh rupees invested when any one of us is 25 years old, and allowing that money to grow up until we're 65. Keeping that in a fixed deposit, which today earns, round about 6% a year, will leave us with 10 lakhs at the end of that period. On the other hand, investing that in the equity markets, where on average we can, markets have performed over 10%, but assuming 10% returns, that money can be 45 lakhs. So there's a significant difference in terms of the potential returns that one can achieve by investing in the markets, and especially at this early point in our lives when risk appetite is a lot more. We have a earning career ahead of us. It is important to take on that little additional element of risk in the form of equity markets to allow us to build a more secure financial future for ourselves. The second point on this is the fact of investing early. And here, I'm sure a lot of you are familiar with the benefits of compounding. So I'll just, spend a quick second on that, which is, the earlier you start saving, the longer that money has to grow and accumulate, and the better financial outcome, you will end up with. So again, looking at a similar example where, we have 1 lakh rupees saved up with us, and putting that in the equity markets, earning 10% a year. If we start at 25, like in the previous example, we'll end up with 45 lakh rupees at 65 years of age. If we wait just 5 more years and delay that investment, we end up with only 28 lakh rupees. That's a difference of 60% in terms of the end value, with the same capital amount to begin with. That is entirely generated from the benefits of compounding. And that is why I think if there's anything that's taken away from the session today, I would say it is to start investing as early as possible. And it's not about, having a large amount or waiting to accumulate a certain amount to begin that investment journey. It is important to get into that habit as early and as soon as possible and build that up over a period of time. So, now as we think about, we sort of walk through the basics in terms of how to think about finances, how to make sure we are saving money aside. I want to just touch upon how we should think about investing that money. So if we can move to the next slide, please. So when we think about where to invest that money, there's one core fundamental aspect which is extremely important when building up an investment portfolio from a long-term perspective, which is diversification. Diversification basically means investing or putting your money into many different kinds of assets, many different kinds of securities, as well as across different geographies, which ensures lower risk across the portfolio and a lower potential adverse impact if the markets are impacted. And so when I talk about securities, what I mean is, it's great to be invested in the equity markets, but one should not take to specific companies. So we should not be overly no matter how good one might think the companies are. And I think a great example of that is Yes Bank. It was a private sector bank doing extremely well until beginning last year. And suddenly, because of the scandal, the stock price deteriorated, and a lot of people lost a lot of money. And if you were very concentrated within that portfolio, it would have severely impacted your financial situation. And those kind of things are always very difficult to recover from, to make up all the lost ground in a period of time. The second element of diversification is across asset classes. And by this, I mean, of course, I've mentioned fixed deposits, I've mentioned equity. Debt is another asset class. Nowadays, cryptocurrency is generating a lot of interest, and people are taking some exposure to cryptocurrency as part of their portfolios. And it's a good thing to do that, but again, in moderation to ensure appropriate diversification. And lastly, diversification across geographies. And this is both from a perspective of equity and debt investments, because when investments are concentrated in a specific region or in a specific country, there is a high level of exposure to the geopolitical situation in that economy. And any adverse impact could have a material impact on your investment portfolio, and therefore it's important to build some resiliency by diversifying across countries. And here, one thing I would like to highlight is for a new investor or for someone who is looking to get started in the markets, one of the best ways to get started is via a broad market mutual fund or an ETF. And I'm sure most of you are familiar with these sort of instruments, which are an easy way to build diversified exposure to either the equity markets, the debt markets, or across asset classes. And it's a highly recommended way for investors to start building up their overall portfolio. So now I just want to focus a little more on the aspect of international investing. And coming from the perspective of diversifying across geographies. I think here, like I mentioned earlier, it is important, and I will highlight, especially in the Indian context, why it is important to ensure that we are appropriately diversified. So the first thing to highlight is India is less than 3% of global market capitalization. And this is a very, very concentrated market. And of course, India, there are a lot of positives about the Indian economy in terms of a large young population, relatively high GDP growth. And those should not be discarded. However, from the aspect of constructing an overall robust portfolio that can withstand the ups and downs of the market and not be overly sensitive to the particular economic situation within India, diversifying beyond the Indian borders is an important aspect of this. The second element is when we are investing in India, we are, of course, investing in rupee-denominated assets. And historically, there has been a significant depreciation of the rupee against the dollar. As you can see on your screens, an average of close to 5% per year over the past 10 years. And what this means is by investing in dollar-denominated assets or either US stocks or US funds, you get protection against any potential future depreciation and end up earning higher returns on those investments. And the other thing I want to highlight, and I think we see this a lot in our daily lives, if we think about most of the brands that we are consumers of, um, be it our phones, our laptops, our apparel, coffee shops, so from your Starbucks, Nike, to Apple, iPhone, Samsung, and even Zoom, which we're using today. All of these companies are global giants. They're massive companies growing really fast, and they are listed internationally. We are all consumers of these companies, and again, investing internationally gives us the opportunity to benefit from their growth as investors as well. And what I want to highlight here is two key things in terms of the market returns as well. Like I mentioned earlier, India has very attractive tailwinds that make it an interesting investing. Over the past, that the US extremely, and even the large US still would find having much return than the Indian top largest Indian companies. And again, diversification allows you to benefit from cycles if certain markets better than while putting yourself ahead and looking at data that is between India.
We'll wait for a while until Sir reconnects. There seems to be a technical issue. We're waiting for Sir to reconnect.
Sorry, I think I had an issue with my network. Um, so I think with that, I basically want to use this session to give an overview in terms of why personal finance is important, the ways in which one should think about personal finances and build good saving and investing habits, the avenues for saving and the importance of diversification when we're thinking about investing, and some of the benefits of thinking about geographical diversification and investing beyond India as well. So with that, I open up to any questions.
Sir, there are a few questions in the chat box. Shall I read them out for you?
Yes, please.
Sir, the first question is from Muskan Goyal. She's asking, what are some of the major myths that you have seen going around?
So I think one of the biggest, I would say, not really a myth, but I think one of the biggest challenges for someone getting started on their personal finance journey today is there is a lot of commentary and a lot of noise in the market in terms of, I'll call them get rich quick investment plans. The markets in the past I would say 3 to 4 years have been extremely bullish and behaved in a certain way that we have never seen such a trend like this before. And therefore, it is important that I would say that there is a lot of attention paid to understanding the investments you're making before actually beginning and deploying money within those investments. Um, and as going through that process, it is important from two perspectives. One, to make sure that you're making the right investment decisions based on what your goals and outcomes are. And second is there is a lot to be learned along the way. And even as I think about my own personal investment journey from how I started investing to where I am today, there has been a significant evolution, and that evolution comes by starting with small steps, dipping your feet in, understanding, asking questions, and learning as you go along, and slowly, building a well balanced investment portfolio over a period of time. And I think just the other thing I think I mentioned earlier, and I would like to highlight, there has, of course, been a lot of interest and excitement around cryptocurrencies in the past year and a half. And there are a lot of, I would say, a lot of people have made money within that. But it is again important to understand why you are making those investment decisions, what you expect to achieve from that, and think of that as part of a wider investment portfolio as another asset class within that portfolio.
Okay, sir. Moving on to the next question, sir. It is from an anonymous attendee. The student is asking, as you know, college students are not very stable on their own. How would you suggest them to work on risk management?
So I think that's a good question. And risk management when it comes to finances, I think the starting point is understanding what your saving potential is and what goals you're saving for. And when you're thinking about risk management, there is, I think, the two fundamental aspects. One is, what is the time horizon with which you are investing in? So if someone is investing, at this stage to pay for further education versus saving for going on a holiday versus saving for retirement, the three very, very different approaches to take when building the investment portfolios for each of these purposes. And therefore, I would say the key crux of good risk management in your portfolio is understanding what it is you are actually saving for. And the other aspect is actually understanding your own personal risk appetite, because everyone has different proclivities towards um, the amount of downturn they would take in their portfolio, and that should inform the kind of assets that you invest into. Because again, certain assets, certain sectors are much more volatile than others, and therefore it's important to have that understanding of your own, I would say, the behavioral side of it when when thinking about your investment decision.
Okay, sir. So the next question is from Amrendram Kumar. He's asking, what do you think is a good time to invest in the market, or currently the market is expensive and we should wait for some correction?
So this is actually a very, very good question, and this is a question I see coming up a lot. Um, the reality is there is no good time to invest, and if if one tries to time the market more often than not, it will not be a good situation. I think someone was asked this question 2 or 3 months ago when the markets were at all-time highs. People might have said, markets are at all-time highs, let's wait for a correction. Since then, the markets have gone up a further 10%. And, no one has a crystal ball to predict the way the markets are going to shape up and how this is going to turn out. The answer to this is actually, in my mind, very, very simple, which is invest regularly, invest frequently, and dollar cost average your investments over a period of time, which is basically, set up a SIP of 5, 10,000 rupees a month, put, 5,000 rupees a month into any other assets you want, but average the cost of that investment over a period of time, and you will see that the portfolio always gives a good outcome in that scenario.
So the next question is from Hardik Moolchandani. He's asking what is the right age to start investing, and what would you suggest a college student in that matter?
So I think the right age is as early as you can start investing, because, like I highlighted earlier, right, one main reason is compounding. Even if you can set aside 5 or 10,000 rupees today, you should put that money to work today because that money will actually grow much faster than anything else. Um, in terms of, again, right amount, there is no right amount. It is, everyone has a different income, different saving capacity, and therefore it's important to understand what your saving capacity is, and then start building that up as in a sustainable way, but as quickly as possible, and accumulate that over a period of time.
Sir, the next question is from Ashish Verma. He's asking what platform or application should one use for investing in the US stock market?
Right. So I have all of my US stocks held on Globalise. So Globalise, maybe I'll give you a quick brief on what we do and what we offer customers. So we're an international platform for basically that gives customers access to the US equity markets. When you open an account with us, it's a straightforward, entirely digital process. You can all the documentation that is required is a PAN card and an Aadhaar card or any other residential proof. Once the account is opened, you get a US SEC registered brokerage account with access to over 4,000 stocks and ETFs. And like was mentioned at the beginning, when you open your account, there is a $10 reward that you get that you can actually use to experience and explore the platform, make your first investment, and understand how that works, trade live when the markets are open, and build up your understanding, and then of course go through add money to your account and start investing in that. The one thing I would like to highlight is that the US markets, there is this concept of fractional investing, which basically means that you can buy a fraction of a share. So, for example, if someone wants to invest in Amazon, a single share costs $3,000, which is close to 2 lakh rupees. But with fractional investing, you can even buy $10 or $50 worth of Amazon shares and hold that in your account. So it's a good way for people to again start investing, start understanding the stock market, start building up their ETF portfolio and overall exposure again across multiple asset classes, because what we offer via ETFs is, of course, equities, but also debt, also commodities. And there are going to be cryptocurrency ETFs that are launching soon. So you can build a diversified portfolio across asset classes as well as across geographies on the platform.
Okay. Sir, the next question is from Twinkle Agarwal. She's asking, what are the careers you recommend in the field of finance for newcomers?
So I think it's an interesting question, and to be honest, there is no right answer. I think I'll share sort of my experience going through that journey, because I knew I wanted to do something in finance, but as you're all aware, finance is a very, very wide spectrum in terms of what all is possible. For me, it was actually important to understand what does each role entail and what is it that I enjoy doing and that I want to be doing. And I basically spent time in each across many, many, call it sub industries in the finance space. So from financial consulting to equity sales and trading to wealth management into investment banking to get a real understanding of what each of these roles entail. And there are many ways to do that. I went sort of the practical experience route. You can also do it by talking to a lot of people. But I think the end of the day, the important thing to understand is what is it that actually interests you and motivates you, and what is it that you will really enjoy working on, and then that is something that you will be able to pursue and actually excel at. But broadly in terms of, I would say, if someone's looking for a lay of the land in terms of entry level positions in finance, there is banking, and within banking, there's a whole host of roles in terms of investment banking, corporate banking, wealth management, and others. There is financial related consulting. Of course, now with a lot of fintechs coming up, there is a whole host of roles opening up in the fintech domain across again across a number of positions. So I think it's important to know what it is you're looking for and then find the best fit according to that.
Okay, sir. So the next question is from Shreya Goyal. She's asking if someone wasn't very well off to invest and wanted to start small, is there a way they could do that?
Absolutely. So, across asset classes, across everything that you want to invest in, it is absolutely possible to start with a very small amount. So, if you look at the mutual funds in India, there is, very few mutual funds have a minimum investment amount, and if they are, it's usually, a 1,000 or 5,000 rupee minimum. So it's very easy, and there are very low thresholds for people to start investing. Similarly on the Globalise platform, there is no minimum investment amount. So for anyone looking to start investing, that you can start with as little as possible, and build up that over a period of time as per your personal situation.
Okay. So the next question coming up is from Mukul Todwal. It's a very interesting question. He's asking, many people are saying that the market right now is in a bubble, and once it bursts, small investors might suffer huge losses. And that is why one should refrain right now to start their investing journey in stock markets. How much do you agree with this point?
So I think I would go back to the point in terms of spreading your investments out over a period of time. And what I mean by that is, even if I have, say, 1 lakh rupees to invest today, I wouldn't deploy all of that money today. That is, I wouldn't make all of those investments in one go. I would spread those, over a period of time. So, say, investments of 10,000 rupees across a period of 10 weeks, which allows you to, capture any upswings or immediate downswings in the market. I think, frankly, for anyone thinking about this from a long-term perspective, building wealth over a period of time, trying to time the market is something that's extremely difficult to do, and something I would recommend against, because in trying to do that, you might forego, the benefits of early compounding and that build up. And the thing is, let me put it this way. Where the markets are today, we could see another, continuing rally of 20% more, and then a dip of, say, 15%. At that point in time, people will be saying, yeah, it was in a bubble, market has dipped 15%, but what they would have missed is the 20% upswing. And therefore, consistently investing will make sure that you're not, significantly impacted one way or the other.
Okay, sir. Sir, the next question is from Harshita Gupta. She's asking, how should we choose to invest in a company?
So I think there are many different approaches when you think about investing in a company. Again, depends on the investment objective. People who are, we call it trading, to sort of turn in and out of stocks on a frequent basis, use a lot of technical indicators, and there's a whole set of analysis that needs to be done to understand swings and what can be done to monetize that. When thinking about investing in individual companies from a long-term basis, it is there are a few things. It's understanding the fundamentals of the company, understanding the business model, getting a view on management, understanding where the sector in which the company operates is headed, and what the future of that sector looks like, and whether there are sort of a general trend that the sector is likely to benefit from, and therefore the company can also benefit from. And then really understand what value of the company you're working towards. Another tool people use for that is analyst ratings. So looking at all the research analysts across, in the case of U.S. stocks, across Wall Street, who publish their recommendations on the stocks, and looking at that to understand what the target price should be, and what their view is on the stock, is also an element that can be factored into the overall investment decision.
Okay. So the next question is from Sehaj Kaur. She's asking, is investing in index funds a good option for long-term investment goals?
Absolutely. So, basically what index funds allow you to do is track the market at a very low cost. And, from a long-term perspective, being able to match the market returns is the way to go. If you look historically, there have been many fund managers who've come and gone, who've tried to beat the market, and there have been very few who've been able to do that over a long sustained period of time of 15, 20 years. And therefore, for someone who's looking to save and invest and build wealth over a 15 to 20-year period, there probably is no better solution than to invest into an index fund and track the market over that period of time.
Okay, sir, we appear to have answered all of the questions. Thank you very much, sir. It was an excellent session, and I'm certain that everyone acquired valuable insights into the concept of personal finance. Now, I would like to ask that our society's president, Ms. Sejal, propose a formal vote of thanks.
Am I audible? Okay. Good evening, everyone. On behalf of my team, I want to convey my warm gratitude to the speaker for sharing his graceful words with us in today's meeting. I would like to thank Shivani ma'am, Urvashi ma'am, Neetu ma'am, and Satish sir for their persistent support. The helping hand by budding analysts has been commendable. They have been really supporting to us. The event wouldn't have been possible without the consistent efforts of my team for pulling the off same so well over here. We are sharing a feedback form in the chat box. I'm thankful to all the participants for coming here and attending the webinar with us. Please fill that up. Thank you. Have a nice day ahead.
All right, thank you, everyone.
Thank you very much.
Thanks, everyone. Once again, it was a pleasure being here, and thank you for having me and giving me the chance to speak in front of you all today. And if anyone has wants to stay in touch, send me an invitation on LinkedIn, and I'm happy to sort of take that forward.
Sure, sir. It was a pleasure.
All right, thank you.
So we have shared a feedback form with you all through the chat box, and we'd like you to fill it out. Filling this form is necessary for claiming the certificates and the prize that is to be awarded. Stay tuned for the future sessions like these and be sure to follow us on our social media pages. We will be announcing the winners on our Instagram page. On behalf of everyone, I would like to extend our heartfelt appreciation for your presence at today's session. We hope you all are safe and look forward to hosting you all again soon. Thanks a lot. Have a great evening, everyone.